Good afternoon, traders. I trust everybody is doing well. What a week last week. Fantastic. The long-awaited dollar move that we've been waiting for has really cracked on over the last couple of months. March has been great, especially for our dollar short positions. Last week, Thursday, I would say historically is probably the most amount of profit shots I've received or we've received as a team, equating to over 200 grand's worth of profit on Thursday, just from community members. I mean, one of you guys done 57k, another done a 30, and then we had a couple of grands come through here and there, and it was just following simple rules. Last week we had a dollar Swiss short for 1 hour. It was I think a 9 or 10 to 1 risk to reward trade, but it was technical, it was textbook, it was off the 20 as we do, and sometimes when we show you examples of trades and techniques, they all look textbook. They all look so pretty and easy to analyze and understand. And a lot of you say, well, not every day on the charts do we see setups that look this great. Well, Thursday there was, and Thursday met the rules to a T. A couple of things we've been working on with some of you that have really progressed and pushing on to a higher level is now using multiple time frame analysis, not just working from the daily 4 to the 1, but now working from the 1 to the 15 to the 5 minute. Understanding the weight, the sentiment, currency strength and weakness plays a huge part into catching that momentum. Remember, momentum trading is that burst of excitement, that initial push that you want to get in, get out, move on. We do not need to worry about all of these 400 or 500 point trades. They will come down the line. As a new trader or an intermediate trader, you need to get good at something, and that could just be 20, 30 pips in the morning like I do, and moving on for the rest of your day, or moving on to perhaps some equity indices at the American Open in the afternoon. Just get good at one thing first. Protect yourself. Risk manage your trades correctly. Get to 7 or 8 winning trades out of 10. Then come with your plan, your track record, your history, and say, I'm consistent at winning 7 or 8 trades out of 10. Now I need to maximize my reward and maximize our gain. Too many new trades are holding on to trades for far too long, giving away too much profit when the market turns due to inexperience and not understanding what signs of price action we should be seeing to look for these turns and pullbacks and different change trending phases and so on. So look, quick recap of some of our major currencies today, guys. A few questions coming in this morning as to what the dollar's up to. Is it a reversal? Is it a pullback? So I'll just give you my insight, my belief, what may happen. And guys, any questions, feel free to drop us a message afterwards. Or most importantly, book your coaching sessions. We've got a large team of traders here that are available to anyone that's serious about working with our team and serious about making money from the financial markets. Remember that making money from the financial markets is different to learning the whole financial industry. The whole finance industry is going to take you years, and a lot of it is not relevant to day trading or making money. When you want to learn how to become a trader, you really need to make that fine choice. Do you want to make money from the markets, or do you want to go on a journey for 2 or 3 years learning about each and every component of the financial markets? Because quite frankly, that's not interesting, and it's not what you need to be doing should you want to be a day trader and make money from the markets on a day-to-day basis. As you become consistent and you progress, then yes, of course, we open up the doors to learning different aspects of the financial markets, using correlated markets, treasuries, bonds, yields to impact our decision when trading our financial markets on a day-to-day basis. But the reason for this point is far too many new traders are out there worrying about what happened to the S&P in 1985. It's ridiculous. It's irrelevant. Let's focus on the momentum, the strength, the drive, the currency strength and weakness, and how to day trade and make money from the market. Get that right first. If you're a visual learner, you're going to pick things up quickly. Then you have time, once you're consistent, you're making money, you're profitable, to then worry about the whole big wide world of financials that we have out there. But taking a look at the charts, guys, this is the chart of the dollar index. The dollar index gives us a weighted average as to how the dollar's performing. It's heavily weighted towards the euro. Over 57% of what the dollar index is made up of is the trade between euro dollar. So just bear that in mind. What you will see is a complete mirror image. If dollar index is overall been moving short, quick glance, guys, euro dollar has been moving up. So we can elaborate that, or you guys can book coaching sessions to elaborate on that in further detail. What I see here is quite interesting. Just to knock you up to a weekly chart, we got what we would have called a double bottom. Price has already created a lower low in here, so we're still seeing that little edge towards the downside. Our most recent candle, the close of last week in here, is a bearish candle. The sellers won the fight. The close of the price was below the open. But this is what we call a doji indecision candle. Pretty large doji, but we're seeing that the open and the close is fairly similar in the sense of the weight in between the highs and the lows of this week. So the high of the bar is the highest price that price achieved last week. The lowest point of the bar is the lowest price achieved. And we can see that the open and close is fairly similar. So it was an average equal week, shall we say. Now, that's typically what we see when we're looking at turning points. You can see here as the market rise and fell, you had what we call a doji bar in the middle. It's an equal number of buyers and sellers. When the market's in an uptrend, buyers are stronger than sellers. When the market's in a downtrend, sellers are stronger than buyers. So there has to be that transition from top to bottom to work out the transition from phase one to phase two to phase one. There's going to be buyers leaving the markets, sellers coming in at one point, equal number of buyers and sellers. So we've got to take that into consideration. Indecision bars, doji bars, inside candles, in turning points can be quick signs of a reversal. It's the type of price action you need to be identifying if you want to be in a trend early or a change of phase early. So you can see here high and low of the week bar. Ignore today's candle. It's 10 to 1 on a Monday. It's not going to give us too much information. What we have to take into consideration is it has broke the low. It's not quite a double bottom. If price was equal or slightly higher, I would say that buyers are going to push on this week. We now need to work out, is this going to be a pullback? Or is this going to be a reversal? There's a couple of key levels for me across the major currency pairs that are giving me the heads up that this might not be a reversal. We might get another leg lower. 105.50, you can see in here, look how many interactions we had previously. Prices touched it, failed to touch it, touched it, touched it, touched it, and so on. So this is 101.50 from an intraday perspective, showed a very hard level. I mean, from an outside end of day perspective, it's not as hard, but we can see multiple rejections from this area that give us the heads up that price is going to struggle when repeating. As we know, levels of support and resistance can be respected either side. When a hard level of support breaks, it then forms a soft level on the pullback and interaction. So I usually, and as you guys that trade with me know, I work to round numbers or intraday levels at levels of 50, 150, which is why I've got the level marked out here. I'm going to be monitoring this level quite closely over the next couple of days. I'm going to say, are we going to break up and come back to 102 and move lower? If so, then I'll be looking for shorts. Should we fail to break and we start to range at this level, it will show me that the buyers are not as strong as they need to be. Remember, in a downtrend, we see strong sellers, weak buyers, strong sellers, weak buyers. And if we're failing to see strong buying in this region, then I'd expect to see one more leg lower, and I'd look to definitely take out these lows by quite some, shall we say. So focus on this area here. Do we break it? Do we reject it? The reason why that level falls quite nice, if I'm honest, so initially I did want to see a higher pullback into here, create a lower high, which gives us more reward to the downside. The reason why I quite like this 101.50 level is if we take a look at euro, you've got 109 that sits in and could fall into quite a nice point. If we pull back in here and create a higher low formation, rejecting 109, so we want to see some nice big bullish candles. Don't try and outsmart a market in phase two. Wait for price to turn and give us an indication that buyers are back inside. Buyers are back in demand, shall we say. That will give you the heads up to then take action. Failing that, you've got this one, and if we're working in blocks of 50, this 109.50 level, which I'd probably be looking to catch from a smaller time frame. So think of this as your 102 and your 101.50 on your dollar index. If we do start to drop down to this levels, this is now a 1 hour chart, and this is obviously highlighting the higher time frame phase two. I want you to look for something like a double bottom, something like a head and shoulders reversal pattern, some sort of breakout that gives us a strong rejection, maybe a bullish pin bar, low test candle, so on. Failing to get that, if it's quite choppy down there, I want you to look for a break of this high. So let the market do what it needs to do. Let buyers show you the way. Yes, you're going to miss that move, but as it range, let buyers show you the way. Weak pullback to show strong buyers, weak sellers, come back into that 50 area and back up we go. So you want to look for cyclicity cycles, but just so I can show you that level again, I'm quite confident we're going to see a rejection here, failing that a higher rejection here, which gives us more reward to the upside. Should dollar weaken off one more time, then use these 50 levels as your guideline. Rejection, engulfing candles, back up we go. Pound similar, you can see the pound sitting on 124. We've had quite a lot of interactions at 124 last week, or last month, sorry, being a daily time frame. And just to show you that weekly chart, you can see that we peaked above quite a lot of these highs. Last time we was above there was back in April, where we failed to stay above. Rejected it, multiple weekly touches here, and we just poked our head through. So this is the area that we're confident to be in. Buyers have been here before. You can see that there's more selling than we're typically seen in all of this move upwards. So phase twos were due. Price has taken out the high one more time. So is this the last amount of buying before we see a deeper retracement to then go again? Potentially. But the fact that a lot of our dollar majors or our majors are sitting on key levels and they all quite respect each other, gives me the indication that price may hold. And if price may hold, that's a great area to buy from. What I would personally be doing in here is using this area as my money area and what I would call a safer buy zone. So I'd be using this area from the high of this candle up to recent highs. You're talking about 130 pips. Then moving down to the smaller time frames and looking for cyclicity within this area. So as you can see, prices on the up, back above 124 from a smaller time frame perspective. You've got lower low, lower highs in here. So this is typically what we'd call a 1 hour downtrend. We now need price to break the high, to break structure. So I'd like to see one, let the buyers go. Don't dive in. Don't be greedy. Pull back. Weak selling, minimum 3 bar pullback. Nice big green bar. Buyers go up. Bang, up we go into the recent highs. So you're talking about, I would say, a 5-to-1 trade. The average 1 hour bar could be 20 points for a 100-point gain, giving away the first 20 in here. So upside potential's there, but be patient. Let the market show you what it's doing. Far too many new traders dive in, trying to outsmart the market. Let market show you the way. Catch momentum, strong week in, you go up, you go into the recent highs. If price cracks on after these recent highs, let it do what it needs to do. Scaling, hold your position. Take profit, wait for the next cycle, get back in at a cheaper price to rebuy. There's lots of opportunities, methods, strategies, and entry levels you can look at. But the key is to getting in, making money, moving on. There's no harm in closing trades if you're 20, 30, 40 points up on a smaller time frame. No profit is profit till it's banked, and more importantly, you withdraw it. So rather than worrying about your friend who's done a 200-point trade, don't worry about him. Get consistent at something. 20, 30 points, move on. Most of my positions, in fact, 90% of my positions are anywhere between 6 and 9 in the morning, on average for about 25, 30 points, or collectively 25, 30 points. And that's enough, depending on your risk, your account size, and obviously the monetary gain you're looking to expose, then each to their own. But that's enough. Believe me, that's enough. We don't need to be overdoing it. If you're consistent, you're making money, perfect. We need to simplify trading. Too many people overcomplicate trading. Cool. 68, 66 is your daily 200-point range. The fact that we've broken a higher low in this region here, buyers come up, price rejected 68. It shows us quite a clear sign, if I'm honest. Should dollar weaken off and we get back above 68, this then becomes your buy area. You don't buy until we break that 68 level, which has formed quite strong resistance. If we see the complete opposite, then you want to get a higher low, or a lower low, should we say. So now we're starting to see the bearish cyclicity move down. As we're just shy of 66, and of course we've rejected 66, we've been playing this area for quite some time, even previously, I would use the 68, 66 as your guidelines. You're a buyer above 68, which I think will happen, and you're a seller below 66. Kiwi's in a similar position. We've got a really tight 100-point range here, which we're respecting. So you want to see cyclicity on the smaller time frame below 62 to be a seller, cyclicity above 63 to be a buyer. All the time price is pissing around in here, let it do what it needs to do. And of course, on a daily chart, it's quite clean. We can see that price is ranging. When you move to a smaller time frame, it's easy to be, shall we say, misled. The price, no, brilliant, look, it's now bullish, it's now cycling. It's not. This is just the smaller time frames exaggerating rejection on a higher time frame. Yes, you can look at cyclicity from top to bottom, but these are not going to be your high probable trades. These are going to be low probability of success trades that we advise you stay away from. Dollar Swiss, again, you've got this 0.90, huge level. This was massive to break 90 last week. I'm just going to show you that textbook setup on a 1 hour time frame. You cannot get better than this. Cyclicity, crossover, weight moving down, phase 1, phase 2, touch the 20 moving average. First seller's bar to close below the 20 moving average. Entry candle, big engulfing candle, wiped out 1, 2, 3 hours worth of buying, nearly 4 hours worth of buying. Your entry to stop ratio is 20 points for an all-time gain of 100 points. That's a 5-to-1 risk to reward trade. Absolutely fantastic. If you miss this opportunity, then what, again, we've been working on with some of you guys is using the smaller time frames, which cycle more frequently, provide more bars, more opportunities, and getting in on the smaller time frames. And that's exactly what we've done. If you look at a 5-minute chart here, I'm just going to zoom out for quickness. You can see that we've got another entry there, entry there, entry there. You had 4 more opportunities to get in, lower risk, higher reward opportunities. Pretty good from that sense. So where we're looking now, if we see this dollar weakness, if we get that, guys, that 90 level is perfect for us. We want to see real shallow, boring, weak buying. Weak buying is fantastic. The weaker, the better. plod along, come up to this 0.90 area, big seller candles, engulfing candles, down we go. That's your opportunity. Failing that, if you miss that, then of course use the smaller time frames, as we just briefly discussed, 4 hour, 1 hour onwards, to actually find those opportunities to get yourself in and out of. Breaks back above 0.90 and a complete change of sentiment would leave a great inverse head and shoulders for a 200-point gain back into 92. For those of you that have been trading for quite some time, you'll know dollar Swiss at 92 is a fantastic and used to be a real heavy level for dollar Swiss. So always bear that in mind, guys. Dollar yen, again, you've got your 132 that should be, and 134, 200-point range we've been operating in. I'm loving this upside potential when dollar yen does pick up some steam. So yen weakness, dollar strength. Yen can be brought as a safe haven currency when there's political risk exposure across all of the financial markets. So yen getting strong is not something unknown, and definitely not something to shy away from. When the yens are strong collectively, you see big moves across the board. And if we do see that, we've got some great downside potential. 120 is an area that I'd like to see dollar yen at, which would then give higher time frame. I mean, look, it's a huge move lower, but again, with the way the world's going, we're going to get yen strength across the market. It really depends on the dollar's strength, but price has been down there recently. It was only last year we was back down at these levels. So I don't trade a monthly, but if you look at an extension from a monthly leg lower, you get to these levels quite nicely for a move higher. Even this 123 level, where price stalled for quite some time back in back in 2015, you could see price back. Oh, it'd be amazing if we get that. Dollar Singapore. Dollar Singapore again. Dollar Singapore follows the weight of the dollar. So as soon as we get some sort of direction from the dollar, then fantastic. You can see today we've already had a double top from that 101.50 level. Double tops are reversal patterns to the downside, so that could tee up quite nicely for one more dollar sell, one more dollar leg lower. Cool. Hope that helped, guys. Any questions, give us a shout. Very brief insight, but as always, I hope you managed to take something away from it. And we're here to help when you need us, guys. All the best. Take care. Hope this helps. See you soon.